Hi, I'm Peter Rose, founder of Longwood Currency Trading. How do you trade? I'm getting some comments from folks who send me emails. You constantly say, we can't use indicators or patterns, and I rant on about all that stuff. And you have to learn how to trade first before the answers to questions like I just did one on multiple time frame analysis. Whether questions about that sort of thing really mean anything, that you have to understand trading itself. How do you trade? Trading is an art, not a specific skill that you have. It's an art because there's a little bit of pixie dust that's involved in that. Now that pixie dust is based on information. But it's not just information, because anybody can get information. You can't learn a foreign language by reading a dictionary. So it's not only how the information is presented, but it's the order that information is presented in that's important. And so you have to have some common sense in looking at the information that's available to you in any particular skill that you want to learn. If you were looking to learn how to drive a car, look at all the information that's out there. I mean, you could get distracted learning how to tune a carburetor up, or what the number of pounds per square inch should be in your tires. But what does that got to do with learning how to drive? It doesn't. And yet, that's how trading is being taught. It's being taught with information and stuff instead of based on principles and how you apply the information. And that all starts with, well, what information do you need to know? I mean, you can go to Baby Pips and learn everything that I would teach in a course for thousands of dollars. So why aren't you going to be successful doing that? It's because that's just information. You're not paying for information. You're not paying attention to someone for information. You want to know how to implement that information. What you really need to understand in solving any problem, you have to know, well, what are the tools that I have? How do I implement those tools? And as I say all the time, when do I implement that? And that's really how you construct your rules. Again, those rules are based on certain information. So you have to be able to separate out from all the clutter of the stuff that's out there some basic information. You know, in computer programming, I was a software engineer for 33 years. There's what they call reserved words when you're programming. Words like for and while and if. You can't use those as variable names, like they're reserved. If, you would say in the language, if this value is bigger than this value, then, which is another reserved word, you do this, else, which is another reserved word, you do that. Now, some of those if then else's are broken up not with a then and an else, but with squirrely brackets. But that make any difference. The squirrely bracket is a reserved character. So in any endeavor that you're looking to do, there's a key vocabulary that you need to know. Not all of the vocabulary. If you were going to learn English, you wouldn't give the person a dictionary and say, here it is. You'd go, the same way when I went into Spanish class when I was in high school, and German class when I was in college taking German. You know, the teacher in the Spanish class comes in and says, "Me llamas Bob. ¿Cómo se llama?" Well, what the hell are you talking about? Me llamas Bob. Bob. Me llama Bob. Llama Bob. Oh, llama Bob. What's your name? Oh, Mike. Oh, SDS Mike, to the rest of the class. That's how you learn. Well, you one critical word at a time in order to build a relationship between a word and its meaning of what it is, how do you use that? How do you use that, como se llama? How do you use that phrase to ask somebody something? How do you say this? ¿Cómo se llama Bob en inglés or español? So, in trading, what do you think the reserved words should be? And not only do you have reserved words, that's a misnomer, it's not really words, it's concepts. What are the concepts that you need to know? Well, that's why when I work with someone, I teach what I call the life cycle of a currency position. That's a terminology, phrase that I got from my 33 years as a senior software engineer. That's a phrase that I captured from my 33 years as a senior software engineer doing business applications development. You've got a problem, and it's a complex problem. And so you have to break that problem up into pieces. It's called the software development life cycle. What's the first piece of the problem that you need to solve? What actions take place? You do your preliminary analysis, and then you do the next step, and then you do the next step. That's a software development life cycle. Get your requirements, filter through the requirements, put the requirements into phases, present those phases to the client. Can we do this as a deliverable in 2 months? Okay, then this is the next deliverable, and that'll come 2 weeks after that. So you lay out this development plan. And so the life cycle of a currency position is exactly that for the solution of the currency market, the Forex market. The life cycle of a currency position is entry analysis, position management, and exit methodology. Jesus, isn't that fucking obvious? You know that. If you don't understand how to break these problems up, why do you think 90% of the people fail? It's because they're learning fucking bat patterns and RSI and stupid Fibonacci. Now, I have nothing against Fibonacci. I got my bachelor's degree in physics, almost a minor in math. We use fibs all the time, but not for trading. Fibonacci has absolutely no correlation to trading at all. God, these guys that get out there, they really believe that the Fibonacci is telling them what to do. Underlying to that is they understand what to do because they understand how to trade, but when they're going to tell you, they can't tell you how to trade because they might not have the ability to know how to teach. And so they say, oh, well, you see how this thing matches these fib levels. The fib might match the levels, but it isn't the levels that create the fib. You're putting the cart before the horse, and that's why it doesn't work. And so when you're going to learn how to trade, you have to understand what the problem is. The problem is you got to enter the trade, you got to manage the trade while it's there, and then you got to get out of the trade. It sounds so stupidly simple, you know that. But if you don't write it down, then how are you going to say, oh, okay, I got this problem about entering the trade. How do I solve that problem? Well, what does that mean? It means you're going to come up with some rules in order to safely enter that trade. What are the characteristics that you have to enter the trade? You know, I only have, I have basically 3 rules to resolve all 3 of those phases. And 2 of the rules have corollary statements that, for example, take into consideration whether you're in a trending market or whether you're in a chop. The rule's the same, it's just when you implement the particular stuff that you got to implement. That's the only difference. Because if you change the what or the how, you're screwed. You can't. How can you develop a solid rule? So you have to understand problem solution first. And in my fast track program, for those people who already, they know how to trade, they don't need any fundamentals or anything like that. I mean, in my long course, I have 5 modules, and And the first one is foundations. It's all the mechanics and the plumbing of trading. Well, if you already know how to trade, you don't need that. And so what would be in the full course, maybe 150 pages of material that then needs some consulting to go with it. That's done in 5 pages in the fast track. Okay, so the fast track starts out with, well, what's the problem? How do you solve a problem? How do you solve a problem? And it gets in immediately to the life cycle of a currency position. And then it matches up some of the trading metrics to that life cycle to show what the flow is through entry analysis, position management, and exit methodology. It shows the whole thing right up front. And then you can move on to there. But first of all, you have to understand what the problem is, and then you have to look to, well, what's the solution? I mean, what's the goal? The goal isn't to win the trade. That's not the goal. That might be the termination of a particular rule or a phase in the life cycle of a currency position. But what's your goal? That's the next thing that I always talk with. And we do this if we interview, or people who just want to chat with me. We'll do a video conference or something. If I can solve your problem in 15 minutes or something in a video conference, that's great. I'll tell you about the stuff that I offer, but I'm not trying to sell you anything. I don't want to run a training business. If I can help somebody in 15 minutes and they can go on and better their lives in their trading, I'm happy with that. I accomplished what I needed to do as an educator. I helped somebody. But if somebody needs to step through the different pieces because they're unfamiliar with how to put all this stuff together, that's where you'd look for a coach or a mentor or a teacher or something, right? And so the objective of the goal of the whole thing is making money. Not making money today. What difference does it make if you make money today or you don't? This is a probabilistic endeavor, not a factual process. You're going to win some and you're going to lose some. So the process is, well, how do you lose less than what you win? Well, we can figure all that out really simply. There's some simple solutions to that. But why are we solving the problem? What's the big goal? So the question that I ask to folks that are willing to take the time to email with me and then get on a video chat is, well, how much money do you want to make a year? I mean, realistically, sure, you'd like to make $2 million a year. Well, you don't call me if that's what your goal is. That's just stupid. And I've had people call me who are making $1 million a year in their particular business, or they're worth millions and millions of dollars, and they want to start with a $300,000 account because they have it, and they want me to work with them. And I go, no. You don't know what you're doing. You're going to lose your money just like everybody else. You have to start from the beginning. You have to start with a $1,000 account. If you can't make 40% on the $1,000 account, you better not go. You better not go putting any more than $10,000 or $20,000 into that account, because that's going to go like shit through a goose. What's reasonable? What do you reasonably want to make in that first 12 months after you've done your trading? What are you looking for as the target goal of the money that would be helpful for you? If you don't have a whole lot of money to put into your bank, you can't expect to make. You can't take a $10,000 account and make $60,000 from it in a year, unless you're trading at 200 to 1, in which case after you make the $60,000, you're going to be trading the same way that you were, and you're going to lose all that. There are shortcuts, but not 200 to 1 or 100 to 1 leverage. There are rules that form the core of the rules. Like in driving, there's rules to making sure you got the gas tank filled up and you're not driving too fast and all that other kind of stuff. But then there's also the overlying rules of the road. You can have all the rules about safely starting your car and not blocking up your exhaust pipe with snow and all those other kinds of things. But if you get out on the road and you don't know the rules of the road, you're going to get crushed like a bug. So trading is a process. And so learning how to trade is also a process. I wish I could help folks out that do email me with questions, but all I can do is answer that specific question to the best of my ability. But that's just information that hopefully will solve that person's particular issue that they have. But I've told many, many people it doesn't appear that you really understand trading itself, and that's based by the question, the way the question is framed, and also by the response, if they're polite enough to give me a response about that, as to what they're going to do. The characteristic response that I get after I provide an answer to someone is that they come back with another question. And it's that other question that then can also help me understand where they are in their knowledge of trading itself. How do you learn how to trade when you're getting into this stuff and all you have maybe is a stock market background where they use all these indicators and stuff, and maybe it works there or not? I mean, I think that probably a lot of it would work there. But they're different indicators, and they're different priorities and orderings of those indicators that match up with the characteristic of the stock market or the commodity market is. I think you get a much better set of rules for risk management and making a lot of money through currency trading, sound base rules for trading, than you do in learning the stock market. And yet you get all these guys that learn the stock market and they come into currency trading, try to apply those rules to the currency market, and you get a 90% failure rate, because most of the guys that are teaching out there come from the stock market or had knowledge of the stock market or learned this stuff from somebody who started in the stock market, and they got lucky at 200 to 1. And I mean, look, if you've got a $20,000 account at 200 to 1, it doesn't take very many hops to get to six figures. And then you roll the dice on that seventh or whatever run, and boom, now you're dealing with high mid six-figure account. And now what are you teaching? Don't risk more than 0.25% of your account. Don't risk more than 0.5%. Use the Fibonacci stuff, and God almighty, that's not teaching somebody how to win. That's teaching them how not to lose. People spend more time trying to figure out how not to lose than they are figuring out how to win. People have more of a fear of loss than they have of a want for gain. It's ass backwards. Now, there's a time in your trading to get greedy, and there's a time to be very fearful. But most of that is inverted. Look at the statistics that tell you that most traders cut their winners short and let the losers run. Isn't that the way that you've learned what happens to traders? Well, what is it exactly that you're going to, and that's an emotional thing, not a physical thing that you can fix. I'm overweight, so I stop eating 12-ounce steaks and loading up with mashed potatoes and stuff for maybe 8 or 10 weeks, and I'll drop some pounds. It's not that's not it. And yet that's what you're being presented with as a solution from these folks. You really have to step back from it on your own and look at it objectively and figure out what is trading, what's the problem I'm trying to solve, and then try to figure out the information that you need to solve the different pieces of the problem that you've broken up. I got this big problem, and it's broken up into 4 pieces or 20 pieces or whatever you break it up as. I break it up into 3. Well, what do I know? Maybe you break it up into 20. I did it because I like simple things. I wanted simple rules, just a handful of simple rules to sit down and trade. And that's why I can sit down and trade and do what I do. Do I lose? Yeah, I lose. I lose big time. And I lose catastrophically when I don't follow my rules and I have an opinion about what I think is going to happen because I'm looking at some fucking fundamental thing and I'm going, oh, Jesus, this blah, 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 blah. And then I get stuck for 300 or 400 or 500 pips because I don't let go of it. Boom, you push it all to the center of the table. Okay, so I'm not afraid of pushing it to the center of the table, but that's what I do. That's what I do. When I trade by the rules, I make $30,000 months, or I make $8,000 months based on not such a large bank behind me. I'm Mr. Conservative all the way through until I think I'm right, and then I'm going to push it all to the center. But that's a choice that I make. And because I make those too often, I'm 74 years old, but I still think I'm 30. I make those choices a little too often. I've gone in and readjusted the rules that I particularly use that acts as a shutoff valve when the thing starts to go against me. So I'll lose a lot of money, but I won't lose a lot of money. What do I teach when I coach somebody? How an Indy race car driver drives his car? No, I'm going to teach you the fundamentals of trading, the fundamentals of problem solution, then the fundamentals how they're applied to trading. Then we're going to look at the at the key phrases that you need to learn or have so that you can build some rules. Now, you're not going to end up with just 3 rules. You're going to need more than that. How many rules are you going to need? Probably 10. If you have more than 10 rules, you're going to be out of gear. Now, they're not rules that are based on permutations. You know, if you have 2 objects, you have 4 permutations. You have A or B, or AB or BA. So you got 2 things, you can put them in 4 different orders. If you have 5 things, there's 325 of those permutations. And so by having 10 rules, that doesn't mean you have 9,800 permutations that you put the rules in. Because the rules, if they're done correctly, are sequentially mandated. You can't just take Rule 8 and swap out with Rule 3. In indicators, you can. If you have 5 indicators, you can mix and match. Are you going to use the moving average as the primary rule before RSI, or are you going to put the RSI before the moving average rule? So you have that permutation complexity. The fact that you have 10 rules, those rules are in order. You know, you'll learn that if you study with me, how to put the rules that you have in order. And so you want as many rules as you can come to initially so that you solve the problem of your trading and you can become successful at that trading. Maybe get to 60-40 on your trading. Now that doesn't mean that you're going to make money. So the second phase, the second part of the win-loss ratio is not only your win-to-loss ratio, but you also have to have a good average win value that overcomes the number of times that you lose. So that's the second problem that we look at solving when I'm working with somebody. See, the order of the solution of the problems of the life cycle is critical in order to understand how to learn how to trade. So I'm just trying to tell you what you need to do. I can't do that, and I can't show you how to do that in a video, and I can't show you when to do it. And I wouldn't attempt to do that in a video. That's what I have my coursework for and my consulting, and that's why I get paid a lot of money, because I know how to do this. And I make a lot of money when I follow those rules. So you need to listen to what I'm saying and figure out how to do this stuff on your own if you don't want to pay somebody to be a mentor for you, to figure out how can you make $60,000 a year from your trading. That's what I'm going to try to teach you how to do. Now, initially, I'm going to teach you how to make maybe a couple of $1,000s a year. Let's pay your light bill first, because you're probably going to start out with a small bank. Let's pay the light bill. Once you learn how to pay the light bill and you're consistent in that, and it doesn't take you more than 3 or 4 months to figure out whether you're going to be consistent with the rule set that you have or not, well, then you can just dump as much money as you want into that account with the confidence that you can go from making a couple of $1,000s a year to $20,000 a year to $60,000 or $80,000 a year. It's just a matter of how much wood you're going to put on the fire as to how big the fire is going to get. So I don't want to, this is a long video, and 99% of the people haven't got to this point so far, and that's okay. You did. By the way, let me know in a comment if you did, if you did get that far in the video, that you watched the whole thing. I get about, I think, 4% of the people that watch my videos get all the way through. So I'd just like to hear from you if you got all the way through, and if you got anything out of it. Thanks very much for watching, and your time and your attention, and the emails that you send me, and I hope that I can help you if you send me an email as well. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.